Jerome Powell just got done with this speech and answering questions, and the market is racing up. We got some really positive changes from last meeting and last speech that I want to talk about. I also want to go through what was happening before the meeting and what was happening before the speeches, because there was some interesting news. Then I want to go through what Jerome Powell said, some of the wording behind how they viewed the economy right now and the market. And then also I want to go through the market reaction. Now I do want to thank Bets Recruiting, but we'll talk more about that later. Now, as you can see, the market is racing up on this news, just the crypto market, but we'll look at stocks as well. Now, the Fed raised rates by 25 basis points, which was what the market expected. And the stock market and the crypto market didn't really move on this news. When it really started to move was with what Jerome Powell said during a speech. But we have to be careful. Cautiously optimistic is where I am right now, because we do have a lot of big earnings over the next day and a few hours. So we don't want to get ahead of ourselves thinking we can just pile into any single stock out there, because we still have a lot that we need to see from Amazon, Apple, Alphabet, Meta. There are a lot of big companies that their outlooks will influence the market. We still got good news from Jerome Powell, which we'll talk about. Now, I think we do want to be a little bit careful in this market, because there's still a lot of stocks that are like exploding right now, like Peloton's up nearly 100% year to date. Just today, they're up 24% after it came out that they're only losing $100 million a quarter instead of $550 million in the year ago period, which is crazy, right? They are a $5 billion company today after being pumped up 24%, and they're still losing $100 million. So just be careful. Don't pile into stocks just because they're moving. You still want to pick, I think, long-term companies that are doing well, and same thing with crypto, right? Don't just buy crypto because it's moving up. Still have to be smart about this. Even if the Fed switches and the market rallies, we still want to be buying companies that really make money long term. And part of this was that they cut a ton of their workforce. And this kind of gets into half of what the Fed is trying to do, their dual mandate. One, they're trying to keep inflation at a certain level, 2%. The other part is they're trying to keep unemployment low. And we got news that Peloton cut half their workers. PayPal's laying off 2,000 employees in the coming weeks. Rivian is cutting 6% of their jobs. Every single tech company is cutting jobs. Now, as we've said a few times, there are really two things that are influencing the Fed at this point. One is the labor market, and then one is CPI and inflation in general. We've started to see a lot of tech companies start to lay off workers, though. I mean, just last month alone, we had 200 plus companies lay off tech workers for a total of about 60,000 layoffs. So today, our show sponsor is actually a company that is trying to help recruiting. They're trying to help people in tech, because so many people know some of these names. They know, for example, Microsoft or Facebook, but a lot of them don't know all the smaller tech companies that are growing quite quickly, or they're just looking for people to join their team. Now, this company, Bets Connect, has been around for 14 years. They're a $20 million plus company. They have 37,000 followers on Indeed. Now, they have over 100 tech companies that they work with and over 250,000 people on the platform. There's a focus on sales, marketing, and customer success roles, but they will look to expand into other areas as they continue to grow. Now, they reached out to me because they're getting into cryptocurrency so that they can have a reward system for using their platform. So basically, if you're part of the talent network, you can sign up, interview, get hired, or refer your network and receive tokens for doing so. If you're someone that's a company, you can get tokens just for signing up for Connect. You can spend your tokens by unlocking job opportunities or getting exclusive trainings. Now, if you want to get access to Recruit Coin, you can sign up for early access, connect to your crypto wallet securely with MetaMask, and buy Recruit Coin using a credit card, Ethereum, Bitcoin, or stablecoins. So they are having their public sale right now, February 1 through February 7. That's the first public sale, and then as time goes on, you get less and less bonus, and then they're going to have their initial token sale on March 3. Of course, always do your own research. I'm not telling you to buy or sell anything, but I think they are trying to help people in a time where a lot of people are seeing layoffs in the tech industry, so you should definitely go sign up for their platform if you want to look for another job. Now let's move on to what the Fed press release said and what Jerome Powell said. So this is back in December. This is the meeting before this last meeting that happened today. And they said inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. Now in today's reading, they say inflation has eased somewhat but remains elevated. They took out the fact that they're having trouble due to the pandemic, higher food and energy prices, and broader price pressures, and just said that it's starting to ease, but still high. So that's bullish. That is a little bit more dovish. They're starting to see inflation come down, and they're not seeing some of the massive problems that they've seen before. And someone asked them why they took out the wording about the pandemic, and they basically said that they had to take it out at some point, and they think it's really not affecting people too much, at least at an economic level. Businesses are better at coping through these kinds of issues, so they had to take it out at some point, and this was when they figured they should take it out. They also changed other wording. In determining the pace of future increases in the target range, the committee will take into action the cumulative tightening of monetary policy, and then you can continue. But they basically said, this is last report, they are determining the pace of future increases. In this newest report, they said in determining the extent of future increases. So instead of the pace, instead of changing how much they're going to raise by, now they're talking about how long they're going to raise. So it sounds like, and this is what Jerome Powell pretty much reiterated later, they're going to continue to raise by 25 basis points. Now, from what Jerome Powell said, it sounds like they're going to do multiple rate hikes of maybe 25 basis points. The market's pretty much pricing in one 25 basis point hike at this point. So we'll have to see exactly how that works out in the future. Now, after that, I think we should really look at what Jerome Powell said and how he answered some questions. And I have some notes here. So he said the housing sector continues to weaken. GDP growth has declined. The labor market still remains tight, however. So this is where that dual mandate comes in. They are starting to see some indications that things are weakening, that inflation might weaken because of GDP growth and housing sector weakening. But they think that since the market's still tight, it still makes sense to raise further. They say while inflation has been decreasing, they will need substantially more evidence to be confident that inflation is on a sustained downward path. This is very similar to what they've said in the past. He did say, it is gratifying to see that disinflation process now underway, and we continue to get strong labor market data. So they're starting to see disinflation. They're starting to see substantial amounts of inflation coming down, or they're starting to see substantial disinflation process now occurring. But they are also seeing a strong labor market. So that's pretty positive. I mean, maybe the market would like it even more if they said that they're starting to see a weakening in the labor market, because then both sides would be tilting to the fact that they should pivot. But still, I think that's quite positive that he said that they're starting to see disinflation. And someone asked, what do you need to see for substantial evidence? Because they said we need substantial evidence to be confident that inflation is in a sustained path downward. And Jerome said, there's not one metric that they're looking for. Basically, they have two more unemployment reports. They have two more CPI reports before their next meeting. They'll be taking in all the information and trying to make the best judgment moving forward. Now, on the subject of cutting rates, he said, if the economy moves in the way we suspect it will, it won't be necessary to cut rates this year. But if inflation moves down faster than what they expect, then that will be incorporated in their policy. So overall, I think he was quite dovish. I mean, he said that they're starting to see disinflation. He says that they may have to change depending on how quickly inflation comes down. And generally, there's a lot of stuff that I can't even convey, but he seemed a lot more dovish just speaking. He didn't seem like he was trying to be really hard pounding the table that they're going to continue raising rates at an aggressive rate basically until they crush the economy. It's not anything like that. And this all caused the market to pump. As we can see here, the S&P 500 is up 1%. Now, this could change by the time that you see this video, because we see these wild swings when the Fed speaks or when Jerome Powell speaks, and we're still breaking out of this trend line. You can still see we're well above now the trend line that we broke through just about a week ago or a week and a half ago. If we go down to the 1 hour here, we have moved up a lot too, just since the meeting. It sounds like since Jerome Powell spoke, the market's really taking this quite positively. I mean, we were negative before the meeting started. And you can see the QQQ is also breaking out from the same downtrend that the S&P 500 saw. We can go over to the 1 hour here as well, and same thing. The market is taking this very bullish stance on what Jerome Powell said. The dollar index also fell. I mean, look at this big red candle. This is on the day chart here, but we went from 102 down to 101, basically going down 1%. Bitcoin is moving up on this news too. I mean, we have some big red candles here. We're just on the 1 hour. Not quite to where we were just a few days ago when we pumped up to almost 24,000, but a couple big green candles. And Bitcoin dominance staying steady. So that means that the whole crypto market is rallying. So let's take a look at what is exactly happening in crypto. Well, we have ETH moving up 2%, Bitcoin moving up 1.5%. We have a lot of other cryptos moving up as well. If we just go on the last 1 hour here, Optimism up 11% in an hour. Phantom up 8.2%. I made a video just yesterday talking about why you want Phantom for the next bull run. I'll put that on the end screen here. But a lot of other cryptos too, including Immutable X moving up 8%, GMX moving up 6.5%. And overall, it's a good time to be in the market. I mean, we're up over 1.1 trillion. And stocks are moving up as well. When we look here, let me just refresh to make sure that everything's new. We had Tesla racing up 5% while Jerome Powell was speaking. Microsoft is up 2% now. Google's up 1.2%. Nvidia's up 7%. Tesla is still up 4.7%. And of course, we do have a lot of big earnings. I want to be careful right now because I have been dollar cost averaging for a long time. I'm not saying now is the time to go all into the market, but it does seem like the market's very excited about what Jerome Powell said. Basically, telegraphing that they are going to raise maybe 2 times, maybe 1 time, depending on data coming in, and they're going to raise 25 basis points. Then they think it'll be necessary to pause and then keep those levels for maybe 6 months to a year, depending on more inflation coming in, though. If inflation continues to come down, they might start cutting rates towards the end of the year. And I think this is all quite positive news. Basically is making the market calm down a little bit, saying, hey, you expected right. The market, might be a little bit off, but Jerome Powell's basically saying that they are not expecting to do something that deviates from the market greatly. And basically a lot of the wording was quite positive. They're not seeing the same inflationary pressures. They're not thinking about raising rates quicker than 25 basis points at this point. Someone asked even if they stopped hiking rates, would they maybe let it sit for a meeting at the same rate and then hike in the future? And they said, basically, we're not looking to do that either. So after we pause rates, it's most likely just going to stay there and then start moving down at some point in the future. They're not looking to pause and then start raising again, like I said. So overall, I think this is really positive for the market. If you've been buying, great. If you haven't been buying, you might want to consider dollar cost averaging. That's what I've been saying for a year now, because we have had some really good prices to buy assets at, especially for the long term. I mean, a lot of this inflation probably won't continue to stay here for a couple of years in the future, and the market will get past this. Let me know your thoughts on this underneath the video, though. Thank you again to Bets and to RecruitCoin, which I'll put links to them underneath the video, and I'll see you in the next one. Bye.